if you're watching this presentation, you're probably a homeowner, and most likely you want to see if you can save money. And you want to know if refinancing is the right strategy for you. And however, you don't know where to start. You've seen the commercials on TV, you get a lot of junk mail about refinancing, but you really don't know if that is the right way for you to go, and you don't know if you can trust the people that have given you that information. So basically, you're looking for free, objective information at this point. You're not looking to make a commitment unless you understand why you need to do a refinance, and you understand that a refinance is the right thing for you. I have to tell you that when I do a mortgage evaluation, 50% of the time people don't need to refinance, and refinancing is not their best solution to save money. So rest assured that when you watch this presentation, the information you're going to get will be very objective, and if you do move forward with a mortgage evaluation, you will get options and solutions to what you can do, and not necessarily an offer for a refinance. So let's move on to the next slide. So what is a mortgage evaluation? This is probably a new term to you. This is a free service in which we evaluate your current mortgage status, and we make recommendations as to how you can lower your monthly payments. It could be through interest rate. You could work on your escrow account, eliminate mortgage insurance. You might be able to reduce your property taxes, even your insurance expenses. And we also evaluate tax deductions and whether you can take benefits. And finally, we look at your overall financial picture, and we determine whether a debt consolidation might be a good option for you. We can also identify how you can pay off your mortgage in a lot less years and save money in the long run. And what's most important here is that we give you an honest, objective summary of your options. And based on that summary, we allow you to make a decision based on the findings and the recommendations that we give you. Now, that decision could mean that you have to do a refinance, but it could also mean that you don't have to do anything. And if you have to do a refinance, it doesn't mean you have to do it through us. You can go to your friend, your mother, your sister, your banker, whoever you want, and do that refinance. This is an evaluation. It is not a way to sell you a product. So I hope you keep that in mind. Let's move on to the next slide. So at this point, I'd like to introduce myself. My name is Luis Escobar, and that's me in the picture down there. I have a degree in engineering and a master's in finance, and I have more than 15 years experience in the real estate industry. I got my mortgage license about 8 years ago and immediately started working as a VP of operations for one of the leading mortgage companies. Currently, I'm a branch owner, and my passion is really to educate people. And that's why I created this video, to help people understand. I've also been involved in more than 60 real estate transactions of my own where I bought and sold property. And I can say I've used probably every mortgage product that's out there back in the days of subprime and Alt-A, and I've done FHA for my own. I've done interest only. I've even used hard money loans to buy and sell property. So I am very knowledgeable in the products, and I can say I'm one of the top mortgage advisors in the country, and that's really what you need to do a sound mortgage evaluation. Anyone can claim they can do a mortgage evaluation for you, but unless you team up with someone who has had the experience, I don't know how good that evaluation would be. Now, one more thing you need to consider is the number of products that this advisor might have for you. And I put this slide here just to show you that I'm a broker as opposed to working with one bank. I work with more than 50 banks, and I have more than 1,000 products. So I can customize a solution for people instead of just giving them one can option where you have to fit in. I actually do an analysis, and I can provide solutions that just really fit your needs. So that's the kind of person you want to be working with. Let's move on to the next slide. Now I'd like to share some real life examples. These are past clients of mine, and these are the results of what happened after doing a mortgage evaluation. This example number one here is a rate and term refinance, and this particular client was very reluctant on doing a mortgage evaluation because he had a 5.25 interest rate for 30 years, which is extremely low, and I can understand that he thought he had the best product out there. Anyway, he had a current balance of $267,000 on an FHA loan, and that FHA loan required him to pay PMI, private mortgage insurance, for at least 3 more years. And his monthly payment was principal and interest plus PMI. He was paying $1,719.13. We did the mortgage evaluation, and we realized that the house had appreciated to $340,000, and so he owed less than 80% on his current mortgage, or he had more than 20% equity, which immediately gave us a sign that he could eliminate PMI. Now, what we did was we changed his loan to a 30-year fix without PMI. We went from an FHA loan to a conventional loan, and we reduced his interest rate to 4.375. The closing costs were about $4,000, so we did a new loan. We rolled in those costs, so this client didn't have any out-of-pocket expenses, and the new loan was $271,000 for a monthly payment of $1,353.06, a total savings of $366.07 every month. So, what can we conclude with this rate and term refinance? Well, most people think that in order to save money, they need to drop their interest rate by 2 points. This particular client was pleasantly surprised to see that even though his rate only dropped 0.875, he was still able to save $366 a month, and he would recoup the closing cost within 11 months. Of course, this client was staying more than 11 months in his house, so it was worth it to him, and he was very, very excited to have those savings. So this is just one example. Let me share another one with you. Now, in this example here, it was a smaller loan amount. This client owed $136,000, again at 5.25 for 30 years. So once again, this client thought that it wouldn't be worth it for him to lower his interest rate. His payment was $751, principal and interest. And so we did the mortgage evaluation, and we identified that this particular client didn't know if he was going to stay in the house for 1 year, 2 years, or 3 years. So going down on interest rate and paying for it wouldn't be feasible for this particular client. So what we did was we reduced his interest rate by half a point without paying any closing cost. And by no closing cost, I mean he didn't pay title, he didn't pay anything. His new loan amount was the same as his original loan amount, and he was able to save $41.66 a month. So with that savings, it's not much money, but it still pays maybe the cable bill every month for the next 30 years. And even though the conclusion here is that even though the client thought that he had to pay for a refinance, in fact, we could do it for free. You don't drop the rate as much as you would when you pay for a refinance, but even dropping the rate a half a point gives you savings, and you don't pay anything for it. The only investment on his part was the time to get the documents and to sign an application. Let's look at one final example. This third and final example here is probably my favorite. It's a cash out debt consolidation. And it's my favorite because it's not only a change in the mortgage for saving a few bucks every month, but it's actually a change of life to basically save the future of an individual. This client owed $238,000 on a mortgage at 6% for 30 years. And they had a $27,000 credit card debt, $10,000 personal debt, and a $23,000 car payment. That was at a rate of 8.25. The total monthly minimum payments that this person was making were $3,147.56. and the home was worth $400,000, and his credit score was 627. So this particular person found themselves really tight every month. When we did the mortgage evaluation, they could barely make the monthly payments, the minimum monthly payments, and they were very, very concerned and stressed out. And because they had a low credit score of 627, they thought they couldn't do anything. Well, after the mortgage evaluation, what we did was we consolidated all their bills, uh, and this cost had a closing cost. This refinance had a closing cost of $3,700. It went from a 6% to a 4.75, but we went from a 30-year to a 15-year. And we rolled everything into one big loan. He didn't have any out-of-pocket expenses. The new loan was $301,700, and his new payment was $2,346.72. So by doing this, we were able to capture more than $840 a month of extra disposable cash for this individual that he could use either to put back into principal or use for savings. So they felt very good about this. We were also able to shave off 12 years off their mortgage. They had 27 years left, and we went to a 15-year. So by doing this transaction, paying off their bills, having a lower payment, they were also able to save 12 years of their mortgage. Whenever I talk about a debt consolidation or a cash out refinance, people get really scared. They don't like to hear that. However, there are situations where a cash out refinance and a debt consolidation is the best solution for a particular scenario. So I would conclude that you don't need to have excellent credit to do a refinance, and also don't be afraid to see if you can consolidate your bills. It might really help you in the long run. Let's move on to the next slide and see what to do next. Now, if you're interested in getting more information about a mortgage evaluation, and you yourself would like to do a mortgage evaluation free of charge, here is my contact information. You have my cell phone number, my office number, and also my email. And I'd be glad to talk to you so we can make an appointment and see where you stand today on your mortgage. Now, this is not for everybody, and you might still be skeptical, but if you think somebody else could use this information, let's look at the next slide, and hopefully you can refer someone over to me. Again, if this is not for you, you might know someone who could benefit from looking at a mortgage evaluation. Who I'm looking for are either your friends or your relatives or co-workers who are open-minded, who own a home, and who like to save money. And primarily, they need to trust your judgment and believe in you. Otherwise, they're not going to follow your recommendations. And what do you tell people? You can tell them that you either watch this video and forward it to them, or you can tell them that there is a mortgage evaluation out there and you know a person who does them, and maybe they should talk to me, and you can give them my contact information. At this point, I'd like to thank you for watching the video. I hope you enjoyed it, and if you have any comments or feedbacks, I'd be happy to get them from you. Have a great day. Thank you.